Good morning, everyone. Welcome to Live Trading Action by InTheMoneyStocks. Today is June 7th, 2016. My name is Nick Santiago. Thank you all for tuning in today. Today I'm going to do a video, I think, on what's going on in the world and what's going on in the stock market. A lot of people have been asking me, Nick, are things really so bad out there? Are things really so great out there? And that's one of the reasons why I'm a technical trader. And at this point in time, I see two sides. I see a lot of bad stuff happening in the world and a lot of good stuff happening in the world. But that's why the charts are most dominant when it comes to trying to make money. Whether you're right or wrong, you're never going to be perfect, but at least they'll give you a good indication. So let's take a look at the S&P 500 daily chart, and we're just going to take a look at what happened really since February 10th, of this year, 2016. You can see how we put in a little double bottom low, and really the markets have taken off to the upside. We had a little brief 30-day correction right here, and then the markets rallied back up. And now they're striving to make new all-time highs. They're not quite there yet. If you go and rewind the clock here a little bit, you'll see that the new all-time highs were last made in May of 2015, and that was right around 213.57, I believe, on the spiders. So we're not there yet, but we're getting very, very close. And a lot of traders are saying, hey, we're going to make new all-time highs now. Market's going to do what they call a melt-up. And while that may be somewhat possible or even true, that could happen, the reality of it is when you see this kind of market, and what I mean by that is market moving up with such lackluster conviction underneath it, it's just a small group of institutions driving it up. And then once the public gets in and they buy into the reality of the market making new highs, then the rug gets pulled out from under them and then it falls again. Now I'm going to rewind the clock here, and I've shown this to members already over many, many weeks ago, talking about how this resembles a lot like 2015. And if you just take a look at 2015, what you'll notice is we have moves up, moves down, but you see how the market really stayed range bound. Even though in the month of May we made a new all-time high, we came back, didn't make a new all-time high, tested the highs, came back down, moved up again. And then what happened was when you got to the month of August of last year, we really had what we call a waterfall type event. You could see the S&P just cratered over the side and really plunged. We went from 210 on the S&P spiders all the way down as low as 182.40. So you can see how we had that big collapse. Now, one thing I want you to notice is look at the volume in those months here. So if I just move this over, and we're going to see the month of May, you're probably averaging, somewhat around 75 to 85 million shares a day. In the month of June, you get a little bit more volume. Market starts to teeter out a little bit. You get a little lower highs. Then in the month of July, which is a holiday month, as you have the Independence Day holiday in the beginning of the month. Then later on, you have this, 100 million shares down to 77 million shares. But you're going to see that there's no real conviction to take the market through to new all-time highs and continue that trend. And then when we get into the month of August, which we like to call the summer doldrums, you got the same type of volume until here. Once you get here, you start noticing 172 million shares, 194 million shares, 346 million shares. Here you had 507 million shares where you capitulated. And then the next day you had 369 million. Markets trying to find a bottom. But that's exactly what we're seeing at this point in time right now. So if you fast forward and you look at the market here, just say in month of March, you can see we're only having probably half the days getting above 100 million shares. Volume is still very, very light. Then when you go into the month of April, you only have 4 days, maybe 5, where you get, just 4 days where you get above 100 million shares. Then you get to the month of May, which we just passed, 2016. We're looking at 1 month, 2, 3, 4, 5, 6 days in the whole entire month where you trade over 100 million shares. Now we're in the month of June, and we're not even near 100 million shares. We have 1 day where we traded 101.7 million shares. Other than that, it's been 69 million, 63 million, 64.8 million, and today we're looking at 16.6 million. It's a little bit past 11 o'clock. we are possibly going to test the lightest volume day of the year. Now, when you get that kind of volume, you have to think to yourself, what kind of problems do we have out there in the world for the market to even worry about? Well, you have the June 23rd Brexit. That's where England will vote and decide if they're going to become or remain part of the Eurozone. Then you have the U.S. presidential elections, which will start heating up momentarily as we now have the two candidates, Donald Trump versus Hillary Clinton. Next up, we have a China debt crisis. China has been an absolute disaster. In fact, if we take a look at the Shanghai chart, this is a chart that looks absolutely dreadful, and I think they know it. So if you take a look here, and we're just going to go with more of a weekly or monthly chart. Look at this thing. This here topped out in 2015, and it's now trading at its lower end of the range. And this is a chart that just tells me it wants to go down to 2000. So again, while it's still in choppy mode and holding up, this is ultimately problematic, and I think everybody in this business knows about that. Next, you have the European debt crisis. You also have a big problem with Italian banks. That's why the European Central Bank and Mario Draghi are trying so hard to keep things together. Humpty Dumpty has fell off the wall, and they're trying to put it back together again, and they're having a very tough go of it, and they're doing a quantitative easing program like nobody's ever seen, and they will start to buy corporate bonds, I believe, as soon as tomorrow. So that is something else to think about. Next, you have a slowing job market in the U.S. Only 38,000 new jobs this month. 3-month trend is starting to head downward. So we have that issue. Next, you have a possible global recession on our hands. So forget about China, forget about Japan. They're a mess. But the rest of the world is also a mess. And next, you have the Federal Reserve that seems to be frightened to raise interest rates by a quarter point. Now, if the Federal Reserve does not raise interest rates, what is that going to do to pension funds? What is that going to do to a lot of these programs that are out there that need higher rates to survive? And that is another big question that a lot of people need to answer them. So we'll see how that all plays out. But when I look at this chart and I see how we're going up to new highs with this kind of volume, that is very problematic to me. So I do think there could be more upside. I don't see any real selling pressure. There's an old statement in the market that says never short a dull market, and this is pretty much as dull as it can get. So we can go higher, but ultimately what that's going to lead to is another 2015 August type fall, and this is where we came down real sharp, and I think that is just ahead in the cards. So we want to enjoy the rally while we have it. We want to take advantage of the rally while we have it. But remember, a complacent market ultimately means danger. And we are as complacent as you've ever seen. In fact, anytime there's even a hiccup in the market, the central bankers, the Federal Reserve, Janet Yellen, or other Fed speakers all come out and reassure the markets that, hey, we're going to stay there, we're going to keep interest rates low, and we're going to do whatever we need to do to keep this liquidity into the system, because we cannot afford to have any kind of correction or any kind of meaningful pullback, because that could spill over and start becoming a domino effect for things to come. So while I think 2016 is a trading year, it's just something to take note of what's going on out here. And I think we have a very complacent market. And you can see that right here by just 17 million shares of spiders being traded at 11 a.m. East Coast time on June 7, 2016, as we make new highs, 7-month, 8-month highs. So again, this is what we're looking at. This is what we're dealing with. But when I tell you a complacent market ultimately means danger, that will come into play very soon. So here's just a quick little warning video. Just wanted to give everybody a little insight of what I look at. And again, I'm not overly short. I'm not overly long. I have both long and short positions out there, and you have to be a trader. But this is one of the reasons why we want to use charts, and I think everybody needs to use charts. All right, with that being said, everybody, I want to wish you all a great trading day. If you want, come over, come trade with us, see everything that we're doing. Take out a 7-day free trial to our Research Center program. You'll get all of our nightly chart setups. You'll get all of our cycle work. You'll get all of our free content. You'll also receive our No Hype Live broadcasts, which allow members to come in and ask us questions directly about anything market related. With that being said, have a great trading day, and we will see you on the charts.